Hi, everyone. Jim Kruzan here, and welcome to the January market update. It is now just early in February. We heard from Puxatani Phil. Looks like we're going to have another 6 weeks of winter. So get all hunkered down. As far as the markets are concerned, it was somewhat of an exciting month of January. As you'll see in a moment, data wise, we saw a continual slide in the LEI as reported out the end of January. That's been a recurring theme now for many months. And we also noticed that the concurrent index, which is that black line, is starting to flatten out, which would indicate, again, additional pressure on the economy. The market seems to be shaking all of this off as it continues to. A lot of the other data underneath the surface was a bit mixed. Credit card delinquencies are still extremely high. We'll get an update on that number next week. And commercial mortgage-backed securities, consider that commercial loans on office buildings, also really quite high, 11.4%. A little bit off of the high from the previous month, but still a very stressed situation. On the manufacturing front, it's a mixed bag. The ISM numbers, which look at manufacturing in the aggregate, they fell. So there was some degree of weakness there. But then when we look at the Federal Reserve banks, specifically Philadelphia, Chicago, the Empire State Manufacturing Survey, they all showed a slight uptick in improvement in their January report. Now, the January report includes quite a bit of data from December. There's always a bit of a lag. We'll see if that continues. That might be kind of an end of the year surge as part of the One Big Beautiful Bill. There's an opportunity for corporations to expense certain year-end capitalization purchases. So we might have seen some of that activity there. We'll see if that remains. Beyond that, the inflation numbers have been somewhat steady, still elevated, not necessarily going up or going down. And the unemployment is still kind of a mixed bag. The unemployment rate is higher than it's been. It's about 4.4. Those numbers are a bit choppy. But the really interesting thing isn't so much the unemployment rate survey or those who are receiving benefit, because that doesn't tell the whole story. When we include those that have dropped off of benefits, those that are no longer being identified as seeking job, the job market itself seems to be a little bit weaker than what's being reflected, at least in the data. I know this morning there was a report indicating new jobs created, and it was quite weak, much weaker than expected. On top of that, we've got a market that's priced to perfection. By just about any metric you want to look at, valuations are really quite stretched. The Buffett indicator certainly suggests that, higher than we've ever seen before, indicating a very concentrated, stretched market. And when that happens, the market doesn't have an awful lot of insulation to protect itself against bad news. We saw a little bit of that on Friday when Trump announced the replacement for Chairman Powell, and at the same time, gold, silver sold off significantly. A huge amount of volatility there, just based on a change in expectation. Additionally, we're seeing other metrics like the Shiller Index reporting near record high in valuations as well. More on this in the months ahead. As far as the month of January, the S&P was up a little over 1%, but we're beginning to see a change in leadership. The equally weighted S&P, which does not have that skewed bias toward AI or Mag 7, was up almost 3% at the same time. The Russell 2000 small cap, which has woefully underperformed the last several years, was up 4% for the month, as was international. And gold, in spite of the sell-off on Friday, was up almost 12% for the month. And as you would expect with this leadership change, the Mag 7, while it still contributes quite a bit to the S&P, almost 35% of the index, and the top 10 holdings still represent in excess of 40, their returns for the month of January represented just 27% of the total return that the S&P posted. Maybe one of the reasons the S&P somewhat underperformed equal weight or value or some of the other indices that are out there may very well be that there is this underlying pressure with respect to Mag 7. We'll see if that continues. Well, that's it here in January, or I should say here in February for the month of January. If you have any questions, by all means, reach out. Otherwise, we'll chat again at the end of next month. Stay warm. We'll talk to you soon. Bye.